oil just surged past $126 a barrel. Global stock markets are shaking. Trillions of dollars in value are being wiped out in hours. And investors across the world are asking one question: is this just another market panic or the beginning of something much bigger? Because historically, when oil spikes this fast and markets crash this suddenly, it's not random. It's a signal that something is breaking in the global system. And right now, that signal is louder than it has been in years. Today, we're going to break down what's really happening behind this oil surge and stock market flash crash, what it means for the global economy, and why some analysts are quietly calling this the early financial cause of a potential World War III scenario. The global economy is built on stability, stable energy prices, stable trade routes, stable political relationships. But the moment one of these pillars cracks, everything else starts to shake. Oil is the foundation of transportation, manufacturing, logistics, and even food supply chains. When oil prices spike rapidly, it sends shockwaves through every industry. At the same time, stock markets are often the first to react to uncertainty. They don't wait for confirmation. They react to fear, risk, and expectations of what could happen next. So when you see oil exploding upward and stocks crashing downward, it's usually not a coincidence. It's a warning. The oil surge. Why $126 matters. An oil price surge to $126 is not just a number. It represents a sudden imbalance between supply and demand. Supply disruption, geopolitical conflict, sanctions, or fear of future shortages. Even the possibility of disruption is enough to drive prices higher. Markets price in the risk of shortages before they occur. The stock market flash crash. A flash crash is a rapid and deep drop in asset prices within a very short time. Investors see rising risks. They start selling assets. Automated systems detect a downward momentum and accelerate selling. Within hours, trillions can vanish from the market. While prices may recover, the psychological damage remains. Confidence is shaken. Oil and stocks are deeply connected. When oil prices rise, businesses face higher costs. Transportation and production costs increase. High oil prices also fuel inflation. Central banks may respond by tightening monetary policy and raising interest rates. Higher interest rates make borrowing more expensive. This slows down economic growth, leading to lower stock valuations. The combination of rising oil and falling stocks creates a feedback loop of fear and uncertainty. The geopolitical factor. Now, let's address the biggest concern. Why are some analysts linking this situation to the early cost of a global conflict? Because historically, major wars and geopolitical tensions have always had a direct impact on energy markets and financial systems. Conflicts involving key regions can disrupt oil production or transportation routes. Trade sanctions can limit supply. Military escalation can create uncertainty about future availability. Even rumors of conflict can trigger market reactions. And in today's interconnected world, these reactions spread faster than ever. Financial markets are no longer isolated. A crisis in one region can impact economies across the globe within minutes. The psychological impact on markets. Markets are not just driven by data, they are driven by human behavior. Fear spreads faster than logic. When investors see sharp declines, they often react emotionally. They sell to avoid further losses. This selling creates more downward pressure, which leads to more fear, and the cycle continues. This is why flash crashes can happen so quickly, because once panic starts, it feeds on itself. And in times of geopolitical uncertainty, that panic becomes even more intense. Is this the start of something bigger? Now comes the critical question. Is this just a temporary market reaction, or is it the beginning of a larger global shift? The honest answer is that no one can say with certainty. But there are indicators that analysts watch closely. Sustained high oil prices, continued market volatility, escalating geopolitical tensions, disruptions in global trade. If these factors continue to intensify, the economic impact would become long-lasting. Higher energy costs can slow down global growth. Market instability can reduce investment, and prolonged uncertainty can weaken economic confidence worldwide. The hidden economic cost. Even without a full-scale global conflict, the economic cost of rising tensions is already significant. Countries may increase military spending. Governments may impose new trade restrictions. Supply chains may be restructured. All of these changes come with financial consequences, and those costs are often passed on to businesses and consumers. Higher fuel prices, higher product costs, lower economic growth. In many ways, the financial impact begins long before any physical conflict escalates. What this means for the future, the current situation highlights a critical reality. The global economy is more fragile than it appears. It relies heavily on stability and predictability. When those elements are disrupted, the effects can be immediate and widespread, but it also shows how quickly markets can react and how interconnected everything has become. Energy, finance, politics, they are all parts of the same system. And when one part moves, the rest follow. So what are we really seeing right now? An oil surge to $126, a global stock market flash crash, and rising geopolitical uncertainty. Individually, these events are significant, but together they tell a much bigger story. A story of a system under pressure, a system reacting to risk, fear, and uncertainty. Whether this leads to a larger global crisis or stabilizes in the coming weeks depends on how these factors evolve, but one thing is clear. Moments like this are not random. They are signals. Signals that the world is entering a period of heightened risk and transformation. And understanding these signals is more important than ever. If you found this breakdown valuable and want to stay informed about global markets, economic shifts, and the forces shaping our future, make sure to subscribe to the channel and turn on notifications. Because in times like these, staying informed is not optional, it's essential.